Rick Santelli here, live at CME HQ, awaiting the most recent reads on initial and continuing claims. Initial claims, 965,000. That is a big jump, well above expectations. Asterisk. The first couple of weeks of any new year have lots of seasonalities. And I'm not talking about the already seasonal adjustment process, just seasonalities. And when you add in the bill that was signed, the stimulus in December by, well, I don't know, the former president, I don't know, he was impeached. But anyway, what we see is implementation there also puts some funk in the numbers, but nonetheless, it's a big jump. And there's also a rather large jump in continuing claims. We're expecting potentially to have our first breach, our first continuing claims number under 5 million. That isn't the case. 5,271,000. That follows a 5,072,000. That still may get revised. These revisions trickle in rather slowly. So both those are higher than expectations. And when it comes to prices, import and export, these are December looks. We're expecting up 0.7 on import prices, up 0.9, a little hotter, up 0.4 ex-petroleum. And if you look at year over year, that's a better gauge. Remember, near term, year over year, whether in any country you look at with COVID, there's pricing issues between the short term and the long term. When you take that long view, it's down 0.3. Now, let's switch gears and look at export prices, up 1.1% on a month over month, year over year, up 0.2. You see that dynamic there as well. How has the markets responded? Well, we were at 110 in a 10-year. Now we're at 109. We settled at 108, so they're a bit higher. We were as high as 118-ish in a 10-year note yield. Do remember that we had 120 billion in supply, and you could view the rise in rates as potentially a huge concession to those investors that think, you know, it's not going to keep moving up and yield down in price consistently without a break, and they seem to have called it rather well. Becky, back to you.
Rick, the export and import prices, a much bigger jump than anticipated. Is that the type of thing that people would sit up and pay attention after 2 reports like that, 3 reports? What's the kind of breaking point?
You know, I think that there's going to be more room on the pricing runway, especially when you try to divide between import-export prices with various economies healing and dealing with COVID hotspots in different ways. I do think over time they will be more meaningful, but I also think over time there may be some changes in the relationship between how trade and COVID and these prices all move after we get more vaccinations and more inoculations, of course, bringing some of these hotspots down a bit.
Rick, thanks. It's good to see you. Steve Leisman joins us right now with more on what's been happening with this data. And Steve, let's jump back to the jobless claims, a bigger number than had been anticipated.
Yeah, and I think there's a couple things going on. Rick pretty much laid them out. First of all, you have some seasonality, I'm sure, after the holidays. It's a big thing. But you also have the new programs that were put in place, and we don't know the extent to which the passage of the new relief bill may have prompted some people to come on and reapply for benefits. That's going to be a part of it. But certainly the biggest part has to be the idea that you have a renewed surge in the virus, you have renewed lockdowns. And I think this is a good moment here to pivot towards Fed policy and what the Fed is looking at. Everybody's screaming the vaccine is coming, interest rates are up, inflation is up. I think the Fed is looking at stuff like this and says, you know what? There's a lot of things going on in the economy now, and for the next several months until the positive effects of the vaccine take effect. And the concern, I think, is people losing their jobs, unemployment, businesses closing down. That creates a scarring effect that's going to have an impact on the ability of the economy to grow down the road, no matter how many people get the vaccine. So numbers like this, and obviously we had the negative number, the decline in December jobless numbers, December payrolls, and concern about January and February. And I don't know, into March is probably the time when you maybe start to see some of the uptick from the vaccine. But that's 3 months, and that's 3 months of, when we get numbers like this, it's going to be challenging and raise questions. And that's why the Fed, I think, is going to stand pat for a while. We'll be listening later. Powell at 12:30 this afternoon.
Shepard Smith here. Thanks for watching CNBC on YouTube.